and opinions expressed in this special program are not the views or opinions of Tropical Vibes 105.5 FM.
Welcome to Leadership Empowerment. I'm Bernard Young, and this program is brought to you today as a vehicle for empowering our listeners, give you a fresh, vibrant download of critical information so you'll be more informed, smarter, faster, able to produce, be more productive, more importantly, to make strategic decisions, particularly dealing with money. Our theme from the launch of the program has been nation building, and we've looked at various aspects of nation building. We've looked at financial empowerment. We've looked at nation building from the perspective of leadership, nation building, community development aspects, and we've of course looked at nation building from the general perspective of lifting the standards of how we operate, how we do what we do, understanding we are competing for scarce resources, not only nationally, but regionally. And so we have to have a stronger, smarter, more vibrant people. And joining me today on Leadership Empowerment is my special guest, Mr. Keith Brandt. He's the Managing Director of Meridian Financial Group. Thank you, Keith, for being on today.
Thank you very much, Bernard, for having me here.
And I appreciate you being here. We're going to dig and plow the soil and talk a little bit about mortgage and financial empowerment. The theme today, financial empowerment through mortgage financing. How we are to use money in a way that particularly leverage money, borrowed money, in a way that's smart so we can build wealth, we can hedge against inflation, and we can become the inheritors and successors of these islands and keys. We'd open up with a word of prayer, short prayer. I'll read a small portion of scripture and we'll dive right in. Let us pray. Father, we thank you. I give you praise for the privilege, the gift of life and health and strength that we have today, the ability to talk and speak with a clear mind on such important issues. Holy Spirit, we ask you to guide us, be with us now in this 60-minute of this program, Leadership Empowerment. We thank you, Lord, again, in the awesome name of Jesus Christ, your Son. Amen. And our wisdom today comes from the book of Ecclesiastes, chapter 10. Ecclesiastes, chapter 10, reading from verses 5 through 7, and it's speaking about leadership, particularly making the wrong kind of decisions, the repercussions that happen as a result of making bad decisions. Proverbs chapter 10, verses 5 to 7. There is another evil I have seen under the sun. Kings and rulers make a grave mistake when they give great authority to foolish people and low positions to people of proven worth. I have even seen servants riding horseback like princes, and princes walking like servants. That says quite a mouthful. The effect of decision making is imperative across every level, whether it's financial, whether it's family, whether it's spiritual, whether it's political, whether it's business, community, philanthropic, wherever we represent leadership. It is imperative that we put the right people with the right skill sets in the right places if we are to have excellent results. And today, our theme, Nation Building Financial Empowerment through Mortgage Financing. Keith, give us a little overview about yourself, how long you've been here, where you're from originally, and just a little something on you.
Sure, Reader's Digest version. I'm Canadian. My dad was in the Canadian military, kind of grew up between Canada and Europe.
Okay.
Went to the University of Alberta, business degree, qualified Canadian accountant. In 1988, I took a position with the Bank of Bermuda in Bermuda. They had me travel all around the world. I spent a bunch of time in Hong Kong, London, Isle of Man, Guernsey, Luxembourg.
So you've had that external exposure.
A fair bit of exposure.
So you didn't come here wet behind the ear.
Nope.
Okay.
And then in my 5th year with the bank, they sent me to Cayman Islands, and I worked with the Bank of Bermuda in the Cayman Islands for just about 2 years. I was then headhunted to come here and head up the Temple Trust Department. I worked there for 16 and a half months and then had a parting of ways and set up Meridian. So when I first set up Meridian, which was 20 years ago this year,
wow.
I was literally a one-man band and started off with a wee amount of capital and a whole lot of drive and ambition.
Right.
So 20 years later, we're one of the larger trust companies in the Turks and Caicos Islands. We employ 14 staff, 12 of whom are Turks and Caicos Islanders, and my wife and I are very proud of the sort of accomplishments we've had over that 20 years.
Yes, indeed. Oh, that's a wonderful story, Keith. Tell me something, just very generally, what part did drive, motivation? I know you must have had experiences where sometimes you didn't think you'd meet payroll and there were challenges. Tell me, what is it that need to be in a person to push a person to the accomplishment similar to what you have achieved?
Well, I think at a young age, you have to look at yourself and make some decisions as to what you would like to accomplish and where you would like to be in life. And without trying to sound too egotistical, when I was 10 years old and we lived in Germany, the military people were moving constantly, and I took it upon myself to go to the PMQs, which were 3- and 4-story walk-up apartments, and ask the returning Canadian military personnel if I could have their books.
Wow.
Because people did a lot of reading because the television was all in German. And in most cases, the people were kind enough to give me their books, and I would load them onto my bike with a wagon on the back. And I would then go set up a stall outside of a convenience store. And on every Saturday, the base where my dad worked had a garden market. And I would get there bright and early in the morning, the first person every time, even before the farmer showed up.
Right.
And I would spread my books out and take up as much space as I possibly could to display my wares and keep my competitors away. And while I was doing that, my friends were going swimming or playing sports or other things. But my parents both grew up very poor. My dad nor my mom completed high school education. Wow. And I, at an early age, said I was hoping to be a little better financially off than they were, and started saving my money, knowing that I wanted to go to university. And what I did discover early on at that age, in my bookstall on a Saturday afternoon, an older gentleman came up to me and said, "Young sir, I've been watching you the last couple of weekends, and I'd like you to sell my set of encyclopedias for me."
Wow.
And I said, "Well, how much do you want for your encyclopedia?" And he said, "About 200 marks. And I was selling my books for 50 pfennigs, which means 400 books. And I said, "There's no way I can pay you 200 marks for your encyclopedias and try and sell them and make a profit." And he said, "I'll give you the encyclopedias on consignment."
Wow.
And as smart as I thought I was at that point in time in my life, I had to admit that I had no idea what consignment meant.
Okay.
And he explained that he would let me sell the books. I could take them back and forth to my house until they sold, because he knew my father, so he was giving me a little bit of trust. And I would get to keep 10% of the value of whatever I sold the encyclopedias for, but I couldn't go under 160 marks on my negotiating. So early on, I learned that if you were resourceful, consistent, and I'd say honest with people, people were willing to do business with you. And as a young man, as I was trying to move forward, I noticed that a lot of times the older people who happen to control most of the money.
That hasn't changed.
That hasn't changed at all. Were willing to invest with somebody they thought was hardworking and honest, and they would give you a larger percentage of a deal for your sweat equity.
Okay.
So they might invest 80% of the money and you put in 20, and they would say, and you can have 30% of the equity instead of your 20.
Right.
And you learned early on that you could do that. The other thing that I learned is if you use money correctly, you can use that leverage to your advantage.
Right.
Unfortunately, a lot of people use credit poorly, and they end up in credit card debt, and they're paying 18, 20, 22% interest.
Indeed.
And what have they gotten out of it? In most cases, a new pair of sneakers, or they went for a nice meal. And I'm not saying people shouldn't have some possessions and go for a meal on occasion,
Right.
but it's living, I'd say, within your means,
Right.
and recognizing that if you're borrowing to buy a depreciating asset or to incur an expense like a meal, you've got to pay that money back, and you've gained no asset in the process.
So interesting, very interesting, because somehow you ended up in mortgage financing, and I know, yes, at Meridian you do more than just mortgage financing. You're bona fide trust company, and you handle assets and oversee people's money. What specifically got you hooked into mortgage lending?
Well, my mother worked for an insurance agent when I was growing up, and one of my jobs after school was to go and do the filing. And one of the things that I noticed is that in the insurance industry, once you acquire a client, you have a reasonably steady stream of income year after year. Right. So if your product is competitive, and if you're good to your clients, they're probably going to stay with you. Whereas in a lot of other trades, if you're a contractor, you build a house and you get paid for building that house, but if you don't have another house to build, you're now going hungry for a little bit. And I decided that I wanted to get into industries that potentially offered a steady cash flow, albeit modest,
yes,
but it's steady.
Right.
And when I first opened up the doors of Meridian and I did some lending, it wasn't actually on the mortgage side, it was on the car loan sides.
Oh, okay.
But lending on vehicles in the Turks and Caicos Islands is fraught with risk. There's not a very good registration system for liens. Cars, as we all know, are mobile, and when people don't make your payments and you want to retrieve your asset, you have to skulk around in the middle of the night and try and find the vehicle. Occasionally you might get shot at, so not a very pleasant experience in that regards. And after doing that for a year and a half or so with Meridian, I made a conscious decision to set up the mortgage fund as part of a suite of mortgage products, and moved into that. And I quickly learned that there was a niche in the Turks and Caicos Islands that a mortgage fund that was quick and nimble could serve.
Okay. For those of you listening or just tuning in, streaming across the internet or on Facebook or whatever communication platform, our guest today is Keith Durant, the Managing Director of Meridian Financial Group. And topic today, we're dealing with financial empowerment through mortgage financing. Tell me, Keith, what for our listeners out there, and remember, the whole purpose of the program is to educate and inform, what essentially is a mortgage, and what's the advantage of seeking mortgage financing?
A mortgage is a loan that is registered against a piece of real property, so land, buildings, apartment buildings. And the main reason that people get mortgages is that when you're making a home purchase, for example, it's likely to be the largest transaction an individual is going to do in their lifetime.
Right.
And it's very unlikely that if you're buying a house for $500,000, you're going to have $500,000 cash saved up.
True.
So generally, you go to a bank or a mortgage fund or a lending institution and indicate, I have saved a certain percentage of money or a certain amount of money, and what amount of a mortgage would you be willing to lend me based on what I have saved that I can put down as my deposit, what my job history is, how many dependents do I have, what are my other expenses, because it's not just sufficient to be able to purchase a property, you have to show that you've got the disposable income to service the debt.
Well, tell me, Keith, what is the process, the loan pre-approval process, the loan pre-qualification process? What do I have to know as a potential mortgage holder?
Well, I would say with Meridian, we lend a maximum of 50% loan to value. So if someone is buying a property for $500,000, the most that we can lend them is $250,000. We are limited by our prospectus, which is the offering document in which investors put money with the Meridian Mortgage Fund. The mortgage fund is at about $64 million right now,
Wow.
But the vast majority of those monies don't belong to me. They belong to 250 to 300 investors that have put money there.
Okay.
But myself and most of my staff also have investments in the mortgage fund, so we are vested in the well-being of that fund going forward.
And to make sure it works properly.
Yeah. So the maximum that we will provide mortgages for is 50%, and that gives the investors the assurance that in most cases a loan that is made is likely to get repaid in full, and only if it runs into some serious financial difficulty will there be a loss to the mortgage fund.
Right. So essentially you want the potential mortgagor to have some sweat, some equity, some stake in the potential mortgage.
Absolutely, Bernard. When people have skin in the game, they have a
Right.
tendency to stay in the game. If it's only your skin in that game, when the going gets tough, they have a tendency to leave and go elsewhere.
Okay, talk about credit history. How does credit history, my personal credit history, how does that come into play when you're considering me for a mortgage? Recognizing, I know when I lived in the United States, there was a credit bureau, there was a historical compilation of transactions over the years that you could go through from a historical perspective and reference. How does that work here?
Credit history is a little more difficult here. We don't have a credit bureau. So essentially you ask people to fill out an application where they give you some history of their employment. Mm-hmm. If they're self-employed, some copies of their financial statements. Unfortunately, not everybody's honest, so you sometimes have to verify their income by asking for bank statements that confirm the revenue they say they've earned corresponds. You have to take a look at their prior borrowing history. Have they had loans with other institutions? Have they repaid all of those loans satisfactorily? Quite often we have people coming in wanting to refinance, and sadly, most of them have not made payments to the other financial institution and are hoping we are going to solve their problems, and unfortunately the amount that we could lend them is probably, they exceed the 50% loan to value ratio.
Right.
Or you look at a loan payment history that is sporadic at best and indicate that they're not going to make the payments to us. Why would we lend them the money?
Right.
I would much rather say no to a potential borrower who I think is going to default immediately than to find out they're going to default 6 months down the road and have to go through the process of power of sale on a property and auction, etc.
How difficult is refinancing in this market?
Refinancing is not difficult if your credit is good. It's like everything else in life. You have to put in the years of hard work to establish your credibility and responsibility factors for the lending institutions to wish to trust you with the money that they're entrusted to lend out prudently. So that being said, we're a smaller market.
Right.
There is not a plethora of lending institutions here. Mm-hmm. Most of the Canadian banks that are here have very similar lending guidelines, and if you get turned down by one, you're likely going to get turned down by the other two because they use similar guidelines.
Right.
So refinancing, once again, is relatively straightforward if you have a good credit history, but if you have blemishes on your credit history, it's up to you, the potential borrower, to prove to the lender how you have changed things in your financial history or projections going forward that's going to enable you to make the payments with whomever your new lender might be.
Okay, now, assuming I'm a young person with a job and I see an opportunity, I've saved some money, and there's a house on the market or an investment opportunity on the market, and I have that sweat equity, and I approach you. How do I build? What's the best way for a young person to build credit?
Prove that you can save some money. Young people are always challenged, as I was. When you first start off working, you're not making a lot of money.
Right.
We all have basic living expenses. And what I recommend to everybody is to read some financial books. One of them is called The Wealthy Barber, and it indicates that you should pay yourself first. Take 10% of your salary and put it aside in a savings account that you don't touch unless you are going to use that money to acquire an asset. And when I mean an asset, I don't mean a car that you can drive around on with 20-inch rims. I mean something that's going to earn you money, or something that is going to save you money, like getting into a modest home instead of paying rent.
You said something a little earlier that really caught my attention, Keith. You talked about the initial entry into the market after Meridian was formed. You went after the car loan business only to discover that it was perhaps not the best choice, because once again people were acquiring a depreciating asset, and it was far easier for individuals to go and create and make a mortgage which has the potential of increasing, appreciating in value. What has been your historical observation since you've been in the Turks and Caicos? At the base level, are we sufficiently educated in financial matters? Just very generally, how to use money. What's the best way to forego an immediate gratification for longer term benefit or advantage? How can you steer us in that direction?
I would say that the vast majority of young people in the Turks and Caicos Islands are not adequately taught financial information at an early age. And sadly, what happens is they have to make several mistakes that negatively impact them
credit
before they realize that if I want to accumulate assets and actually get ahead in life, that I need to take certain steps and follow them. And it's not just young people in the Turks and Caicos Islands, it's across the world. We're constantly bombarded with advertising, social media, that we have to have the latest Michael Jordan, shoes,
yes,
gold trinkets, and things along those lines. And you're absolutely right. People have to have a little bit of short-term sacrifice in order to get long-term gain.
Right. Now, seeing that is a fact of life, and we all been there. We all had to learn some things through the school of hard knocks. That's what I call it, the University of Hard Knocks. That's failure. Crash your credit. You have to build it again. You have to start all over again. Do you think it's a wise thing, perhaps, or as a preemptive strike, to maybe have financial empowering classes and a financial empowerment awareness early on in maybe high school level, as something that could be perhaps done along with entrepreneurship? What do you think?
Absolutely, because we teach kids about the solar system, but the likelihood of any of us visiting Jupiter is pretty remote. And yet the likelihood of people getting a job, having a bank account, getting a credit card, potentially a mortgage, much higher possibility, and they're given no formal instruction on what to do with those assets or those potentially liabilities before they, like you say, get into the school of hard knocks.
Okay, tell me about adjustable rate mortgages, fixed rate mortgages. You know, those are terms we hear thrown about in the marketplace. What's applicable here mostly in the Turks and Caicos?
The banks here generally have two types of interest rates. The big Canadian banks are primarily LIBOR plus a certain amount of percentages. So if LIBOR, the London Interbank Lending Rate, goes up, then the amount of interest that you're paying on your mortgage each month will go up, even though your payment may stay the same.
Okay.
The other one is a fixed interest rate, which is primarily what Meridian uses, that for a term of your mortgage, meaning a 1 to a 3 year period, the interest rate will be fixed at 8% or whatever the rate is determined by the lender for that borrower.
Right.
The thing that everybody needs to understand is that unless you get a 15 or a 20-year locked-in rate mortgage, when interest rates rise, the cost of borrowing will go up.
So ultimately, if your loan is amortized over X number of years in an environment where interest rates tend to be moving up, and your payment, you noted, remains the same, it means it's going to ultimately extend the life of that mortgage.
It's going to take you more months or payments to make that mortgage get paid off. And what will happen, because none of the institutions here offer a fixed period, is that at some point your payment is going to get adjusted upward if interest rates continue to go up.
Wow. So all of that is implicit in the mortgage deed to allow the lending institution under certain circumstances.
It's not implicit, it's explicit. It's clearly explained.
Oh, okay.
However, a mortgage document is 12, 13 pages long, and not most people don't read through it all.
Right.
So I strongly advise people to get proper legal advice, and they should ask questions. What will happen in 3 years' time when the term of this mortgage expires? And the answer is the interest rate could go up or down, depending on your payment history and what's happening in the world around us, because we are slaves to what happens in the U.S. by and large. If their interest rates go up, interest rates in the Turks and Caicos Islands are going to go up as well.
Wow.
We have been fortunate for the last 8 years to be at historical low interest rates. But when I first moved to the Turks and Caicos Islands 24 years ago, people might remember that interest rates were much higher back then, and 13, 14% mortgages were not unheard of.
Wow. That's interesting. For those of you out there just tuning in or coming in on the internet, Facebook, or any other platform, our guest today is Mr. Keith Durant, the Managing Director of Meridian Financial Group, and we're dealing specifically today with financial empowerment through mortgage financing. We are indeed purposed today and going forward with other programs to ensure that we're always bringing to the forefront on leadership empowerment topical issues that will both educate and inform you, the population at large, to ensure that you're always aware and making good decisions. Decisions are very important in nation building. They build a platform that take us to a better way forward, more opportunities, more efficiency in our decisions. And of course, we owe it to future generations yet unborn to hand to them a legacy that's sound, and we must make that decision in this time of our existence. And I'm just happy to be able to have someone with such vast experience. As you heard, he's traveled more than just in the Turks and Caicos, so that by the time he landed here 20 years ago, he already had an international exposure. And that's exactly what's needed in this country so that we can build the nation, build the people, build educational prowess, build us with the capacity to think and function and be efficient. And today, as I said, we're dealing with financial empowerment through mortgage financing. Now tell me, Keith, what is the advantage of a mortgage, me taking out a mortgage, as opposed to just renting? Let me give you a good example. I've been in the Turks and Caicos now for exactly 64 months. And when I added up what I've been paid, 64 months, my God, I put my hand on my head and I say, how can you be so stupid? But, of course, without that equity to start out with, you're at a disadvantage. So tell me, from your experience, what is the marked advantage that people must begin to realize is getting a mortgage as an advantage over just renting? Because some people have rented all their lives.
Well, the first thing to state is when you go to buy, you should be looking at your first home being a modest home, and ideally the numbers should make sense that the cost of your mortgage and the cost of home ownership should be the same or perhaps just slightly more than renting. Because over time, there is a ratio that works in a homeowner's favor.
Okay.
When I first bought my first property in the Turks and Caicos Islands, it was a modest place in Richmond Hill. Okay. And my wife and I moved there. We got it at a very good price. We had saved our pennies for our down payment. We basically borrowed some money to get into the property. It had an apartment below it, which we rented out to help save the mortgage. Right. I'm reasonably knowledgeable mechanic-wise, so I reshingled the roof myself. I extended the deck along with the assistance of some local contractors.
You did some improvements.
Certainly all of the minor plumbing and everything like that, I was very much hands-on, as were all of my family in the early days.
You saved some money.
You know, you must be frugal.
Yes.
And what you will find is, for example, you buy a property. In this case, I still remember it was $168,000, and we managed to get into it at 10% down. So call it that we had a mortgage of $150,000, and slowly that mortgage went down from 150 to 148 to 146, and we lived there for 10 years, Bernard. We could have moved into nicer homes along the way as the income stream improved.
So you had a premeditation. Even though you could have afforded something much bigger early on, to stay there, bring the mortgage down, delay your gratification to make a more strategic decision down the road. So tell me something. I'm just going by what I've observed. Now, I've been here for a little over 5 years. You've been here for 20.
A little more than that.
23. Plus. Generally now, this is general observation, I have observed that no one wants to wait. No one wants to delay their gratification. In other words, rather than go for the modest house, I'll try to go for a $600,000 house. And I have no disposable income to live on, much less service the mortgage. How can a lending institution help people not to make that kind of a mistake?
Well, I think what it amounts to is people have to help themselves not make that type of a mistake. And people need to be cognizant that the situation they're in today may not be the situation they're in tomorrow. So if you have two people earning good money today, you might think that you've got lots of disposable income and you upgrade to a home which is far more opulent and probably more than you need.
Right.
And then if something happens in the economy or someone has a medical issue, before you know it, you only have one income and now you're struggling to make your mortgage.
Right.
But the point I was getting back to earlier, Bernard, was there's a ratio between your mortgage decreasing, in the case of the Richmond Hill villa, from $150,000 down to zero, and that's a nice day when your mortgage goes to zero and you get out from underneath that monthly obligation.
And you could burn that mortgage.
And the same period of time that when that property mortgage was going down, the property value was going up. Now, property values don't always go up, but over a long-term period, house prices generally do go up.
Historically.
Historically. So we bought a house for $168,000. Over 10 years, we paid the mortgage down to zero, and the house price was worth somewhere in the $350,000 to $380,000 mark in 10 years' time. So we went from having $20,000 to put down on a property to now having equity in a home worth $380,000.
Wow.
That is the value of borrowing against a modest asset where the cash flow of the apartment and living within your means without getting overextended accrued some benefits to us as a family.
Right. You were having kids too?
We had 2 kids, yep.
And still going through life. You had to eat, you had to live, you had to do other things. It's an amazing thing. So this financial education piece is extremely critical. Extremely important for our people.
It is, but once again, it's important for the people here, but it's also important for people everywhere. I like to tell my staff a little story. I've got 2 nieces who are a little bit older than my kids, and I was up in Canada about 10 years ago now. They were both in high school, and I gave them both $150 for getting good grades. And then I took them shopping, and I observed what they did. And later that evening, I was taking them back home to their parents' place, and one of my nieces said, you know, Uncle Keith, you know, you've done reasonably well. How have you been successful? And I said, well, do you know what the saying, earning your first million is the hardest means? And she said, well, no, not really. And there happened to be a sign for sale on the townhouse next to theirs. And I said, how much does your neighbor have the property next to yours for sale? $195,000, she said. And I said, well, Amanda, I said, if he came over to you tonight and said, I'll sell you this property for $125,000, would you buy it? Absolutely, because, you know, we could take that, we could do this and that, drop the price a little bit, sell it for $175,000 and make $50,000 in pretty quick order. And I said, great. Now, could you buy it? And she, of course, laughed and said, no, I can't buy it. I'm a high school student working at a submarine shop, and I've got a few dollars, and that's it. And I said, right, but I gave you $150 today, Amanda, and I watched you. You went to a Clinique makeup shop and spent $133 there. Your sister spent hers on some jeans and a pair of shoes, perhaps a bit better purchase in my mind. I says, now, if one of your friends that you worked with came to you today and said, Amanda, would you lend me $100 and on payday I'll pay you back $105 or $110? Would you lend her the money? Well, if it was this girl or that girl, I said, if you assume that you can trust them, would you lend them the money? Yes, I would. Right, but you spent all of your money today, so you don't have that $100 to lend them, so you don't have the ability to take advantage of an opportunity, no matter how small that opportunity might be, to make money. So she wanted the instant gratification of some makeup instead of thinking, how might I turn this windfall that my uncle has given me into something more substantial? And people need to think about that when they do get some money in their pocket. It's not obligatory to go spend it immediately.
Right away. For those of you listening out there, streaming on the internet, is very, very crucial as we build our people, we build a nation, to begin to appreciate the fact that we must develop a mindset to delay instant gratification, instantly using every ounce of money we have in the moment to purchase many times trivialities, depreciating assets, things that cannot build equity, neither can appreciate in value. It's so important, and we're learning that it starts with a mindset of being empowered to make better money decisions. Keith, tell us about mortgage closing costs. What are the elements that make up closing costs? Because we can, yes, the mortgage is approved, and someone hold their heart when they understand there's some additional costs.
Well,
associated.
There's 3 pieces that normally go with mortgage closing. You have the loan documentation, or the legal preparation of the mortgage documents, which is usually 1%.
1%
of the principal of the mortgage. That's the sort of standard rate on the island. You have the cost of registering the mortgage at the land registry, which goes to the Turks and Caicos Islands government, and that is 1% of the principal. And then most of the lending institutions charge anywhere between 1 and 2% as a loan establishment fee. And a lot of people think, okay, that seems like a lot of money for a loan establishment fee. Unfortunately, what generally happens is for every 10 mortgage applications that we or the other lending institutions spend time and effort on looking into, trying to figure out if you're going to lend, you turn down 9 of them. And you somehow have to cover that time and cost of doing all that research, and you don't get to charge the people you're not lending money to. Some people do, but that's called advance fee fraud lending.
Advance fee fraud lending.
There's a little bit of that goes on here. We don't see as much of it now, but in the heyday of the, I'll say, real estate boom, there were lenders from outside of the country that were selling dreams to local developers, and you want to borrow 10 or 20 million dollars to do a big project.
Yes.
Fill in this form. Oh yeah, it's all approved now. All you need to do is pay me 10, 15, 20, $100,000 and it'll be approved. And then somewhere in the fine print of their contract was a reason not to give you the money, because to be honest, most of them didn't really have the money to lend.
Wow. Unbelievable. Tell me, Keith, are there any local mortgage regulatory bodies to regulate lending practices, to look at and examine and housekeeping standards, all of those kind of things?
Well, the Financial Service Commission is responsible for the financial institutions in the Turks and Caicos Islands, and I think they do a reasonably good job of supervising the big banks. Ourselves, Temple is a mortgage fund, Scottsfield has a mortgage fund, so I think they do a reasonable job there. Unfortunately, I do know that there are a number of other private lenders out there who are breaking the laws in terms of the interest rates that they charge for short-term loans and things along those lines.
Okay, that's like gouging the rate.
It's loan sharking.
So there's really no regulation of.
Well, it's difficult to regulate it because the transactions by and large are smaller, and the contracts state that the interest rate isn't high. It's the loan establishment fees are through the roof, sort of thing.
Oh, okay.
And it's essentially taking advantage of folks that are very desperate.
Right, and this mainly happens to people at the
lower end
of
the. And to be honest, a lot of them don't understand that if you go and borrow $400 from someone and they say 15% interest per week, what that equates to, because if you think about that, that's over a $600 a year interest rate.
If you take 15% a week and you take 8 weeks to.
You're paying $60 every time, so you're going to pay. If you pay back in 2 months, you're going to pay back the $400 principal plus $480 in interest. So it's very expensive money.
Right. Now I know you've been involved in mortgage lending, commercially for commercial apartments and those type of businesses. There's normally something tied with apartment buildings of that type called a strata. What is it? Explain to the people what a strata corporation is.
Well, a strata corporation is not necessarily affiliated with apartment buildings, but with condominiums. Okay.
Yes.
So when you have a condominium development, there is a separate legal title for each unit that is in there, whereas an apartment is generally owned by one landlord.
Okay.
So within that condominium development, the strata corporation is responsible for the common area maintenance. Okay. So your pool, your landscaping, your parking areas, maintaining a watertight envelope of the building, so the roof and the windows, ensuring that the septic and other mechanical systems are working properly. It's usually self-run, where essentially the owners form a executive body. They look at a budget. They try and set what the capital expenditures will be, the reserves for future projects, and every owner is charged a certain dollar amount based on the square foot size of their unit. So if you're a bigger unit owner, you pay more than a smaller unit owner.
Okay, is there a rate that's uniform, or it all depends on the value of the
Well, it comes down to what amenities every strata corporation wishes to offer to all of the owners. So there are some very modest strata corporations in the Turks and Caicos Islands, but their yard, their landscaping, their pool area will be very Spartan. Then you have some of the more opulent ones like the Pinnacle, for example, which has very nice grounds, very nice pool, high end. All of those owners are paying a much higher dollar per square foot, but they're also getting nicer amenities that go with the common area properties.
Interesting. Tell me, Keith, how hard is it policing mortgages that are not on providentialities per se? Let's say you have a mortgage in North Caicos or mortgage in Middle Caicos. What are some of the challenges?
Well, the policing of the mortgage is not that difficult, to be honest. What it amounts to is what sort of economic activity is happening on the sister islands. When you have a region which is economically depressed, which North has been, for example, for a number of years, or Grand Turk has pretty much been stagnant, there's not a lot of property being bought and sold. So if you have a mortgage that has gone south and you are forced to sell it, you are now, like every other seller in that market, trying to find a buyer. And if there's not a lot of buyers out there, it's difficult to liquidate that property in order to get the mortgage funds back.
Good, good. Looking through the crystal ball 10 years out, because I know sometimes as managing director or leader of any entity, not only a business entity, but any entity, I know sometimes you have to project out, particularly on the core business that you have, looking out into the future, as it were. How do you see the business of mortgage lending changing, if at all? What are some of the changes you see?
Well, I think, nobody should sit back on their laurels. Technology is changing a lot of businesses. So far, that technological change has not come to the Turks and Caicos Islands lending market like it has, say, in the United States, where you see advertised rocket mortgage, fill in your mortgage application at home in your underwear, etc. We are going to see that happen here. Okay, but before that can 100% take place, we need to, for example, computerize the land registry, which is not done yet. So there's a few things that are going to happen in that regards. I think what we're going to see is, over time, the expansion to the family islands. If people look back, Providenciales got its big break when Club Med located here.
Okay.
The government, in my humble opinion, should be actively courting a large, major anchor tenant to locate to North or Middle or to Grand Turk in order to secure the basic amenities for a successful resort environment there. So far, those regions are lacking in that. It will happen. It's a question of time and making sure that we as a country are open and inviting to the potential investors that might want to come here, and that they recognize what the terms of development are going to be. We need to make sure that there's not any rumors that our land registration system is somehow going to be corrupted, because that always concerns people. If you look at the Dominican Republic, for instance, getting clear title or registering a mortgage on a property in the DR is very difficult, and that is why they struggle to get inward investment there. There's been huge resort development, but very little private investor development per capita, as we've seen in the Turks and Caicos.
Because we know that also infrastructural development in the family islands, the other islands in the archipelago, goes along with the potential of investment inflows into those places, because governments tend to try to time it with some big development that's coming. So we're. Do you think we've maxed out in a lot of what's happening in provincialities right now?
No, I think there's a lot more land still available for development in provinciales. You know, if you look at Northwest Point, there's huge tracts of land out there that haven't been developed yet. But I think more importantly is what we should be looking at is diversifying our economy. Right now we are 80% tourism dependent for our GDP. 11% is the financial services industry.
Right.
As a country, we should be fearful that another financial crisis happens, and tourism is something that is a purchase people don't have to make.
That's
so
right.
if all of a sudden the United States goes into a recession and people tighten their pockets, one of the things they do is say, hey, we're not going to the Caribbean this year, we're going to go to Florida instead, or we're going to do a staycation at home. Well, that's going to hurt us, and I think as a nation, we should be thinking of ways of diversifying our economy, whether it's an internet-based businesses, whether it's software development, aquaculture, some other avenues that bring revenue to the country so that we're not so dependent on one sector.
Right. So an 80% dependency on one primary sector is far too risky from just a normal business standpoint.
Absolutely, it is.
Okay, so we're really looking at how to improve, how to project, how to just think a little differently along the lines of how to make the whole ball of wax in terms of investments, decision making, particularly in mortgage financing, a little bit better. And with us today has been Keith Durant, who's eloquently given us an overview, a very broad overview of Meridian Financial, his experiences here, what he's observed in the marketplace, how mortgages have developed, a little layout of the types of mortgages you have, rates, and closing costs associated. Any final things you want to share with us? What is off the cuff of your hat? Anything you want to...
I just think that anybody that wants to get ahead in life has to start thinking at a young age to save money, use the multiplier effect of accruing interest in your favor as opposed to working against you. And the fact is that there is no substitute for hard work out there.
Right.
You know,
Right.
when you're young, you have lots of time on your hands, and instead of sitting around in a parking lot drinking a beer with your friends, you should be thinking about a second job if you're truly serious about buying a home or getting a small business started. You need to put in that time to work and accumulate some wealth. Some sweat.
Yeah.
And then the other thing is, this is a small country. People that work hard are observed. People that don't work hard are observed. So when you show up at a lending institution's door and your reputation is probably preceding you through the answer that you're going to get shouldn't come as a big surprise.
No big surprise.
And so what I'd say is, hard work, prove to people that you can be trusted on a smaller scale so that they're willing to trust you on a bigger scale. As you know, Bernard, I'm pretty heavily involved with the rugby community.
Yes,
here,
indeed.
And I have seen the personalities of over 300 young men come through the rugby program.
Right.
And for a lot of those young men, I'm able to provide some assistance in finding their first employment, either through me or through some of the other senior members of the rugby club. But sadly, I've also found that there's quite a few young men that when given the opportunity to prove themselves responsible, they fail.
Yeah.
And you give a person several opportunities to prove themselves, and at the end of that point in time, you have to sort of say, right, if you can't do this simple task competently, or at least put an effort into accomplishing it, you're going to struggle in life at everything else.
Right. You've also opened up, as I know personally, Mr. Durant has opened up a considerable amount of opportunities for our young men, particularly in terms of scholarship opportunities to go off and study for higher education. Keith, I know Cardis, one of the young men I worked with in my assignment at TCI Ferry. He is in college.
Yeah, well, we've had a number of the young men through the rugby program go off to university, and that's not solely my doing. Their scholarship opportunity occurred while they were attending the under-19 competition in Orlando, and we've had a number of other young men been offered scholarship opportunities, but unfortunately their academic qualification or lack thereof means that they cannot get into the university. So we're straying a little bit from mortgage stuff, but as a life lesson, young men and women need to recognize that it might not seem worth the effort when they're in high school to fulfill the requirements to get a diploma, but they really need to get that diploma because it's going to close so many doors later in their life if they
There
don't
will be a day of reckoning.
There always is. You just might be too young to recognize it.
Yes, and for those of you that have joined us today, we have had a good discussion formulating ideas on mortgage lending, and our guest has been Mr. Keith Burant of Meridian Financial Group. And thank you so much, Keith, for joining us and just sharing in this special way. I'm going to have you on again another time, and we're going to talk a little bit more about nation building from the financial impact of economic diversification. And I really appreciate you coming on and sharing this special way with the people in the Turks and Caicos Islands. For those of you under the sound of my voice, this has been Bernard Young of Leadership Empowerment, and I always leave with an anecdote, and today I have something from the annals of the late Bruce Lee. And he said thus: "Knowing is not enough. We must apply. Willing is not enough. We must do. Wake up, everybody. No more sleeping in bed. No more backward thinking. Time for thinking ahead. Wake up, religious leaders, family leaders, political leaders, business leaders, philanthropic leaders, leaders across the spectrum of the Turks and Caicos. It's time to wake up."
The views and opinions expressed in the preceding program are the show hosts